Good Friday morning, Market Chameleons. Everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show with this man all the way from Philadelphia, Dimitri Pargamonic. How you doing, D?
Hey, well, how's it going?
Good. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we're not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need advice, call your registered investment advisor, call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Excellent.
And let me share my screen here. If anyone is joining us for the first time, Will and I, we do this show in the morning to help answer any questions you may have about the Market Chameleon tools, data, or analytics. If you want to come on a show and ask your question live, we provide a link to Zoom. It's on that live chat on YouTube. Click on that link. It takes you over to Zoom. Once you're inside Zoom, there's a button that says raise your hand. Click on that. You don't have to turn on your video camera. Once we let you in, everybody could hear you. You could ask your question live and direct. If you prefer typing in your question, you can just type your question in on the live chat on YouTube. Will's watching that as well, and he'll read them back to me as they come in. While we're waiting for more people to join us and put those questions in there, we'll start taking a look at the pre-market report, which are stocks trading in pre-market hours, see if we can get some insights there. If we don't get questions coming in, what we'll do is maybe take a look at other parts of the website, see if we could get some insights, or fall back to some questions I get either through the email or chat. So let's start with the pre-market, Will, and then you'll let me know if any questions come in.
Perfect.
All right. So pre-market report. These are stocks trading in pre-market hours. We have our most active stocks, our biggest percentage gainers, biggest percentage decliners. Down here, I see 68 stocks made our percentage gainers list, 98 on the decliners. So from this perspective, we're looking like we're set up for a bearish bias at the open. So if you take a look at this list, you'll see that there are small cap stocks in there, ETFs, leverage products, really anything that's listed on the major U.S. exchanges. If it's trading in pre-market hours and it meets our thresholds, it can make this list. So we can take this list and narrow down to a smaller group of stocks to get a more focused insight. And actually, before I do that, I do see that the bank, First Federal, still down 19%. That's definitely something, in the news, impacting the markets overall. And it does look like that they are getting bailed out by a group of bigger banks, right? They're going to try to fund them, make them a little bit more liquid, but I guess that's not enough. And I think that right now the debate and that's going on is, how's our financial system going to look after this? We've got these issues, they're popping up now. Banks are getting in trouble. They could collapse really quickly. Right now, the immediate reaction is to contain it, right? To stop it from spreading. So that's right now their major focus. How do we stop this from spreading? How do we stop panic? And then going forward, what is the financial system going to look like? And I think that's starting to become an interesting debate, because you're hearing from people, especially in the finance world. I think like Ken Griffith was talking about from Citadel, how, we're starting to see almost an end to capitalism, where the government, the Fed, is taking over basically our financial system.
Coming from Ken Griffin, that's a little rich.
He's
in that everyone in the space was saved, back in 2008.
He was saved too, for sure. 2008 big bailout. And since then, since 2008, we had regulation, and the Federal Reserve is a very big participant now in the banking services that used to be handled by banks. All right, I'm going to show you guys one of the things really
Well,
quick.
I mean, the whole regulation point, I mean, there was obviously a significant amount of regulation that came out of '08, and then I guess some was changed later on in 2018, whatever. But still, the banks are heavily regulated, and this seemed like an easy catch, right? It wasn't like some obscure credit default swaps or some secondary derivative. This was actually just banks holding government bonds, right?
Which is the safest, you would think.
Yeah, I mean, it's like if you can't identify that as risk, like you've got long-term bonds and you have duration risk. What does more regulation?
The question is, Will, banks and financial institutions are in the business of risk. That's their business.
Yes,
you can't
for sure.
regulate. You're not going to be able to regulate risk out. There's no way to regulate risk away. It can't be done, right? You can't regulate risk away.
I agree.
You could maybe regulate if somebody is doing something irresponsible to the point where, are they stealing?
Where it's criminal.
Lying. Yeah. Are they lying on their income statements? Are they, stealing money? Are they doing something illegal like money laundering? You can't regulate risk away. I mean, what are you going to do? Guarantee?
Oh, well, that's what I'm saying.
Everybody.
I totally agree. And it seemed like again, they're holding, in theory, risk-free. I mean, your principal is protected, right? There was no principal.
They had some risk, right?
The risk was if you had to liquidate early, those bonds had gone down in value, right?
Yeah. But that's what banks do, is risk management. That's their job, is to, lend out, and make investment. They take money from depositors, but they don't hold that in a vault. They have to then take that money and put it into something that yields, right? Either mortgages or loans, or extending credit. That's their business. Even buying bonds, but they have to earn on it. They don't just hold those deposits in a vault and do nothing with it, right? So they bought 10-year bonds, and maybe they waited too long or didn't manage their risk, but that's their job. That's the bank's job, to do that. And I don't think you could regulate that away. I don't think that's, and by the way, I don't even think that's why they failed. They didn't fail because they couldn't handle the loss, because they probably could have handled that loss and started to raise more money. They failed because of the run in the bank, right? They failed because too many people were trying to take out too much at one time, and they don't have it all available to give away. Like we said, they invest it, right? When you deposit money in a bank, some of that, a good portion of it, gets invested. So if everybody wants to take their money out at the same time, they don't have it, right? They have it invested in whatever it is, mortgages, loans, bonds. And that means they need to start liquidating to get your money back. And if everybody comes in at once and they don't have it, they have to go, FDIC takes it over.
Yeah, this is a great Chris Holiday movie. It's a Wonderful Life. And the main character's running a small savings and loan. And it was during the Great Depression, and there was a run on the bank, and he's literally, pulling money out of his, pocket to give to and he's able to convince everyone, hey, listen, I've lent money out to you, John, for your restaurant, you for your house, it's all dispersed in the community. How much do you really need today to get, what do you really need? And so he's able to walk the whole community through, well, I need $3 for, groceries this week. And and he's able to get enough money to pay everyone and to stem the flow of capital out of the front door of the bank. But you brought up a
Yeah.
really interesting point this week in a conversation with me about all the uninsured well, not all, but they were offering the uninsured depositor, people with big accounts, benefits, right? The banks, and that's probably what a lot of these regional banks are doing, is they are giving benefits to people, businesses that have a lot of money, to try to get them into their bank, so they're not just a Bank of America, Gold, they're
Right.
stay within their regional banks. And you brought up some really interesting points that they were giving. The clients at SVB were getting, dinners and venture capital fundraisers, and
Yeah, they didn't just
really generous mortgages. And
these millionaires and billionaires who were dealing with that bank, they knew they knew their deposits were not insured. Everybody knows over 250,000 you're not insured. But why did they take the risk? Because they were getting benefits other people weren't getting. They're depositing money. The bank was giving them loans and bridge loans they couldn't get anywhere else. Some of them were getting mortgages at 2%, on their houses. They were getting invited to exclusive conferences to meet venture capitalists. So they were doing it. They're taking that risk because of the benefits that they were getting, and they knew that they were not insured, but they were willing to take that risk, and they did get bailed. And by the way, I don't even know if it wasn't for the bailout, it sounds like there were enough assets to pay everybody 95 cents on the dollar and perhaps 100%. So it wouldn't have been like a complete wipeout. But the problem was they would have lost access to money for an extended period of time. They didn't want that but yeah, they weren't like these, innocent people that just they put money into a bank and then all of a sudden they were doing it on purpose. They wanted to do banking with SVB because they were getting benefits other banks were not, perks that other banks were not giving them. And at the end, I think that they were bailed out, right? That is a bailout. They were uninsured. They were uninsured. They took the risk, and then all of a sudden the insurance came after the event. So that is a bail that we could call that a bailout. And
we did have a question from Rob earlier. Let me go to it. Where was that? Good morning, early bird. SVB filed Chapter 11 bankruptcy this morning, and futures went from negative 35 or so an hour ago to negative 260 now on the Dow, plus triple witching. Perhaps Dimitri can talk about it. I don't know if, is there extra volatility today because of triple witching, D? What's your opinion on that? I guess that's the question, Rob.
Yeah, I mean, it could, the triple witching, when expiration comes and people, have to either rehedge, reposition, or roll over certain positions that are expiring. And we might see an increase, in liquidity, though, in both ways. It's hard to say if it'll bring more volatility. Depends on like the existing positions out there, and what they're doing. If people, if there are a lot of people out there with short gamma that need to rehedge, that will accelerate volatility. And but I think that volatility is going up for other reasons, because of the uncertainty going on there with interest rates moving around. I think that, volatility with interest rates moving higher, it creates more volatility, right? That has the impact on how assets are priced. Assets are harder to price, harder to forecast. And if interest rates are moving around, so will asset prices. Things become less liquid. I did want to show you guys something while we're waiting for questions. Let me show you. You see these mortgage applications, how they went up, especially, oh, wait a minute, I thought I had it out further. Why is this only shown to 19? All right, let me come over here first with the yields, and I have to show you the mortgage applications. But with these yields, when they came down here, this is the 10-year, and you see that it went down below 1%. And at that point, we had a surge in mortgage applications. People were either buying new homes, taking out mortgages, or they were refinancing. So a huge amount of mortgages got repriced at fixed rates that were very low. And if those mortgages were being held by banks, right, and then we see this, these banks would be sitting on huge, huge losses. But we're not seeing that, right? Like if tons of banks just issued loans at 3% on mortgages, 30-year fixed, and then the interest rates started to go up, we would see bank failures all over. That's not what happened, though. Like you could see here that the banks are failing, but for different reasons. Their depositors are withdrawing money, they're accessing their money. And what happened here was that the Federal Reserve stepped in and started buying back massive amounts of mortgage-backed securities, right? So around here, we had huge amounts of basically mortgage-backed security, of the Federal Reserve, which is now on their balance sheet, and they're sitting on losses, right? They could afford losses, an unlimited amount, but they're the ones sitting on those losses. They crowded out everybody out of the mortgage business, and they basically, you could say, nationalized that industry, right? So banks were just, they were creating these mortgages based on the rules, that were set, and then they were taking it and then selling it back out into the secondary market, and collecting their fees. But they're not holding them, for the most part. I don't think they're holding them on the books, because we would have been seeing a lot more problems right now showing up with this type of thing. So what's happening is that the Federal Reserve, the government, they're taking over a lot of the traditional businesses of the banks, right? They keep doing it, crowding them out, forcing them into other businesses, saying, well, then, what risk do they have? But that's what we see, is that all these banks right now, they have their business now just relies on, people holding deposits in there that they could take it and, put it into money markets that earn them higher interest, or charge them fees for moving money around. And they all have the risk of depositors fleeing, taking money out. And when it happens and it accelerates, any one of these banks, JP Morgan included, which has the hardest assets, can go under really quickly, right? So if you have people withdrawing very quickly, any one of these banks, none of them are immune. JP Morgan, Goldman Sachs, doesn't matter. People start fleeing and they could collapse really.
Where do you withdraw? Like, I mean, obviously this is multimillionaire billionaires. I mean, where do you put this money? I mean, like their mattresses aren't big enough, right? I mean, this is like, one of the rationale for Bitcoin and these cryptocurrencies. I mean,
right.
Because you're taking a, you don't know which bank is next, right? And, you're going from bank to bank, and you may be going into the wrong bank. And it's like, I don't know, it just seems like a loser's game.
And with the SVB, I think what happened was that their depositors were withdrawing because their depositors were in the startup. A lot of them were startups, high-tech firms, biotechs that usually spend before they start getting revenues, or they have to spend more than they're earning. So their depositors started to just draw on their accounts to pay their bills. So they had, more money going out than coming in. And every month the depositors kept, withdrawing a little bit more and more and more, to the point where SUB felt like, well, we have to now raise more capital to pay off this trend, right? So the trend was going the other way. They were seeing money fleeing, decreasing. And I think what happened was that once the word got out that, hey, they had to sell their bonds at a loss to raise capital to start, paying depositors who just keep withdrawing. They weren't fleeing, by the way. Their customers weren't leaving. They were just drawing on their accounts. They were drawing down because they had bills to pay that exceeded the revenue that they were getting. And once the word got out, then people started panicking and just saying, I don't want to be the last one in this bank. And that accelerated. That in 2 days it was out of business.
Yeah, it is amazing. We did it's 9:21. We don't have much time left, but we did have a question from Raj. He was asking, is there any way to screen, I guess it's zero DTE, zero data expiration, for, I think he asked SPX and NDX, etc.
So
is there a way to track 0 days to expiration option flows intraday from SPX and NDX? That's his question.
So right now we don't have the index data. So SPX, it's an index. It's not like a listed equity on the exchange that you could like buy and sell. It's an index, and the index data comes from a different feed. It's there, it's not on the regular consolidated feed. It comes from a different place where you have to go and purchase it, lease it, program into it, develop in it. So we don't have that license and feed to the index data. So right now we're looking into it, but we don't have the SPX, NDX, VIX, because those are not listed securities. Those are indexes.
Perfect.
Yep. Let me, while we're waiting, what I did want to do is take this pre-market report, filter it down. So let's use this filter in ETF and drop it down. And in this list, you do see different ETFs in there. You have the sector ETFs, broad-based ETFs. The top one, SPY, is the S&P 500 ETF. Click on that. And when you click on it, the filter below gets, the list below gets filtered by stocks that are holdings in the SPY ETF. And here we could see that 4 stocks are up in the pre-market, 38 down. So from this perspective, we are looking like a bearish bias right now at the open. And again, I think that a lot of it is due with the financial sector still,
Yeah, well, you look at that list after FRC, which got money infused by the other, but I think you have Zion Bank, KeyCorp,
right,
PNC, Schwab, where's the money come to backstop those banks after this?
right.
Visa,
yeah, and
Citi.
I think people are starting to ask, well, if more regulation is coming, and if the Fed, the FDIC, government is more involved than they already are in those businesses, then really what is the equity worth, right? Like, then is it just a government entity at this point? And if it is, why would it have, why are the management getting these, crazy salaries to do what, and why are, why would shareholders then benefit from it? Because it becomes just, a government run entity. So those that's what I think even shareholders right now are starting to question, what is the future of the financial sector, at least from the perspective of investors, right? For equity holders, what is the future of this financial sector?
I was listening to a show last night, and someone was saying our banking system needs to become more like, I guess, Canada or Europe, where you have just a few banks, right? And I don't know, to me, it seems almost un-American to think about like one or two banks running the whole system from a financial perspective. But
right. Like what is it? And right now we're kind of in the crisis, but that's what the questions are. Like, well, what do lawmakers do after this? What do regulators do after this? How are they going to change our financial system? What is it going to look like? And there's a lot of uncertainty there. There already calls for more regulation, right? But so far, the failures that we're seeing are not because of bad behavior. Really, it's not bad behavior, right? SVB, they're just servicing their community, and they just had more depositors drawn on their accounts.
It's a run on the banks, right?
It's a run on the banks. They didn't do anything. I mean, maybe some of them started selling their stock ahead of this foreseen. I don't know.
The other thing is, it was literally a promoted run at the bank, right? They've talked a little bit about this, but the venture capitalists basically tweeted out, "You got to get your money out of FR." They were.
Yeah.
It's going to be interesting when they peel back the layers of this onion. I mean, were people actually shorting it, which I'm sure they were, but were the people promoting the bank's failure actually profiting on the stock's fall? All these things are, going to come out over the months and years. And
anyway, if you look at it, like at least right now from the surface, it wasn't like, like the credit default swaps, those were, egregious bets that they were making during the financial crisis. Those they were just selling tail risk like it, like it's riskless at very cheap price. But here, it doesn't look like any kind of bad behavior. It was just like unfortunate circumstances where their customers were drawing money,
all at
taking
once.
money out. Well, before even all at once, they were doing it gradually, and then everybody went all at once, right? They were doing it gradually because they needed to access their capital to run their businesses, right? Their businesses were not.
Yeah, everything was slowing down, right?
Everything was slowing down. They were drawing on their. It's kind of like, look, you guys have savings right now, right? But sometimes you have to. You're not adding to the savings; you're subtracting, right? You're using that money because you have bills to pay. Maybe you're doing a renovation, so that means that bank is losing some of those deposits, and that's what was happening with their customer base. So what are you going to regulate? What are you going to, I don't even understand like what you would regulate in that space. Like what risk did they really take? That was not reasonable. I don't even know. They bought treasuries. Well, okay, they took some risk, but that's not what really put them out of business. It was the withdrawals.
Well, we're right up against the half hour, D, in the opening bell.
All right. Well, we didn't get a lot of questions today, so kind of just went off on the banks. But everyone, thanks for joining. Look, stay safe out there. Have a great weekend, and hope to see you guys on Monday.
All right. Have a great St. Paddy's Day, D. Everyone's been in. I've got a little Irish music, my favorite Irish song, Young Willie McBride, going on in the background. You have a
Oh,
great
nice.
day, my friend, and a great weekend, and everyone trade safe today on this triple witching. Thanks, D.
Thanks, everyone.
Bye-bye.